All right, guys, good morning and happy hump day. Hope y'all are having a good week here so far. So, guys, we'll dive in. I'm going to put my watch list over here in the chat. So, give me a quick second. It's LB, a little bit of BITO, Snowflake, Crowd, ALT, MO, Shop, AMC, PME. All right, guys, so there's a few setups I'm going to keep an eye on here today. Now, before we jump in, here's the thing. We're a little bit overbought. So it doesn't mean we have to pull back, but I do think you at least take that into consideration. Meaning we could all get long today. The S&Ps could pull back a good 3.5%, 4%, all the way back down to that daily 21 EMA. It's just a normal dip. You still hold good structure. I think it's a dip you want to buy. So just keep that in mind. Not a guarantee we have to pull back, but you guys know the drill. Up here at 2 ATR, there is that growing probability. For a lot of the market, we're kind of in the same spot right now. The S&Ps are up here at +2. The Q-tips, Q's up there at +2. You got your semiconductors, your Teslas, the Amazons, the Apples. A lot of the overall market, guys, a little bit overbought. So, based on the improvements in the structure, still looking to buy the dip, but that's the key. Looking for a better entry. So as far as a few of the things on that watch list, what they all have in common is they're not overbought. Got a good handful of setups here that are setting up right on top of that daily 21. Now, again, always tie things back to the overall market. Meaning, Shopify, a really good setup, right on top of the 21. Got the same thing here in CrowdStrike. You got the same thing in Snowflake. These look really good. And it's not that Amazon doesn't look good, because Amazon looks awesome. It's not that Tesla doesn't look good. I'm dying to get long Tesla. But again, it's just the easiest part of that move is going to be the push from your 21 EMA up here towards +2 to +3. Got to keep that growing probability in mind. So, in terms of tying things in with the market here, major thing to keep in mind is as goes the market, tends to go a lot of the stocks, meaning if your S&Ps, your QQQ, they end up kind of flushing back down towards that daily 21 EMA. It doesn't ruin the structure, doesn't give back all the progress the bulls have made, but it's going to be a pretty good 3 to 4% flush. So with that being said, even though Crowd, even though Shopify, even though BITO, even though they're not overbought, they're sitting nice and pretty on top of that 21 EMA, as goes the market, goes the stocks. Meaning in terms of probabilities, the S&Ps and the QQQ just flush, and they revert back to their 21 EMA from here. Even though Snowflake isn't overbought, there's a pretty good chance it's going to flush right along with the market. So really, guys, in terms of where do we get our most aggressive on the swing trades? Even if we're trading the individual stocks, so we're trading the Nvidias, the Teslas, etc. I think the best time to get aggressive is when your market is also setting up at that 21 EMA. So if you look back to like last week, for example, right, the week beforehand, we got the big pop. Then we got the dip to the 21 EMA. That's the day to get aggressive as far as like the swing trade entries. If your S&P and your QQQ, if they're pulling back to the 21, they're holding structure, they're finding support, the buyers are stepping in, that's a pretty solid move. And as goes the market, goes the stocks. So like something like AMD, for example, that's the day to get aggressive in terms of a swing trade. AMD itself pulling back to the 21 EMA, but the market's also pulling back to the 21. A little bit of a different context right now. I've got some calls on Shopify. This is our only trade this week. We bought some calls on Monday. Good setup. Daily squeeze on top of the 21. We got them 30-minute buy signals. Really good stuff. But the reality is, again, even though this isn't extended, got to be mindful of the market being extended. So as far as a few things, guys, that do look good, but again, just keep that in mind. I like Shopify here. So, right, daily squeeze, right on top of that daily 21 EMA. We're looking for a push towards 41 to 42 with an exit on a close back under the 21 EMA. So we'll see if Shop can be nice to us today. And you got CrowdStrike here, which is a very similar setup. Good structure, daily squeeze on top of the 21, but it's a little bit neutral. So if we look at the big three labels over here, of course I'm going to wait for a few buy signals. But I do like Crowd. Snowflake here, kind of the same. Rebuilds the structure, got a daily squeeze, histogram starting to shift, but we're a little bit neutral. So waiting on a few buy signals. And then Bitcoin, I think, continues to look pretty solid here. This kind of fits the reversals checklist. And, here's basically my reversals checklist. Step 1, step uno. Looking for something oversold on the weekly chart. And to me, a good rule of thumb is once we're down here at -2 to -3 ATR under the weekly 21, that's pretty oversold. So you're looking for an oversold weekly chart. And we always got to remember, oversold, that alone is not enough to trigger a big reversal, nor is it enough to justify, hey, let's look for a reversal trade. It's only one piece of the puzzle. So step 1, oversold on the weekly. Step 2, we got to rebuild the daily structure. If we're under that daily 21 EMA, I'm not looking for that big reversal back to the weekly 21. Up there at like $19. So oversold on the weekly chart. Then we start to rebuild the structure of the daily. Then step 3 is I got to make sure I don't have any more sell signals on the big three. So pretty much, guys, you're oversold. Then you kind of get that shift in momentum. All that bearish momentum just keeps dragging price lower. And during that flush, I've got sell signals everywhere. But then you kind of reach that point of exhaustion. The bears are running out of gas. They didn't really got enough control anymore to keep pulling this further and further away from that weekly 21. So that's a transition from super bearish to neutral. Now, going from bearish to neutral, that typically can give you a pretty good pop like this. You get back above your daily 21, get a nice little push going. It's just about it. If we're going to continue from here, now we got to go from neutral to bullish. Meaning I'd like to see some 5-minute, 15-minute, couple 30-minute, maybe an hourly buy signal. But I'm looking for that complete transition. Bearish to neutral, from neutral to bullish. That's basically been what you're seeing in the entire market right now. The S&P 500 oversold on the weekly chart. Then we rebuild the daily. Right, back above that 21. We cancel out all the sell signals. And of course, we're neutral right now. But what triggers that push is you start getting a 5-minute, 15-minute, 30-minute hourly buy signal. Bearish to neutral, neutral to bullish. So for like a reversals trade, I do like Bitcoin. And if you think in terms of risk versus reward, where I can get a couple buy signals coming in, I'm going to put my stop on a close or maybe 2 closes under that daily 21 EMA. I would definitely not let it go any lower than, -1. So here's your risk. And I think if you go with some September expiration calls, doesn't mean we get all the way to the weekly 21, nor does it mean you actually have to hold on for that entire push. But there, I think, is your risk. And I do think that's potentially the reward. A push all the way back to that weekly 21. So on every trade, we got to make sure the reward egg is bigger than the risk egg. So keep an eye on Bitcoin there, guys. And then as far as some good old-fashioned buying the dip, Tesla and Apple are pretty much at the top of that watch list. Right, doing the same thing as the rest of the market, just doing it a little bit better. Rebuild the daily structure, cancel out the sell signals. Right? During this push, you got a bunch of buy signals. We're also cleaning up the weekly structure. So assuming Tesla doesn't close under 800 this week, this is kind of setting up to be week 3 of Tesla trading back above the weekly 21 EMA. So it's improved trend structure momentum from a 5-minute chart all the way up to a weekly. But check this out. Monthly squeeze. In a monthly chart, that fits all my bullish criteria. Right? The trend criteria, the structure, the momentum. I don't have a monthly buy signal with my big 3 indicator, but if I did, based on the same criteria that goes into all the other buy signals, we would have a big old monthly buy signal here. And kind of going back to like 2011, this is pretty much what Tesla does. Monthly squeeze, huge ass rip. Monthly squeeze, huge rip. Here comes the big one. Monthly squeeze, monster move, like absurd. And here we are again. So what's interesting is, right, really the last like 8 months or so, we've been in a downtrend. Generally speaking, it's been a pretty bearish market. This never really got bearish here on the monthly chart, right? One monthly close under the 21 EMA, pops right back above it. And you got positively stacked EMAs. You got green 10x bars. This never even went from bullish to neutral. Stayed bullish throughout the course of this year. And the same thing's happening over here in Apple. So I'm not making a call just yet that Apple's going to go on a $150 rally again. But a lot of us, we speak the language of the squeeze, right? Phase 1 of the squeeze. During the squeeze, right, we're building up energy. So that's like your dog stuck in the house all day, not getting any exercise or attention. It's just building up a bunch of energy. Phase 2 of the squeeze, the good stuff, is the release of that energy. And that's when your dog gets fed up of being inside all day and starts to go crazy in the living room. So just based on that alone, we already know Apple's gearing up for a pretty big directional move here on the monthly chart. Now, granted, of course, it's a monthly chart, so this could take, months, a year to unfold. But all said and done, when it fires, when it releases all that energy it's building right now, these can trigger some pretty big moves, guys. The rule of thumb is usually with a squeeze, once it fires, we're going to look for maybe 8 to 10 bars of momentum. On a monthly chart, that's potentially 8 to 10 months. So I do think that's interesting. And for that, right, for that reason, good-looking monthly squeezes, and then all the improvements on the weekly charts, the daily charts. That's why I'm looking to buy the dip in Apple and Tesla. Now the S&Ps on a monthly chart, not as clean. If I had a monthly buy signal, I wouldn't have it on the S&Ps. So in terms of the probabilities game, there's a much better probability the monthly squeezes in Tesla and Apple fire to the upside if the S&Ps and the Qs can at least improve the structure of the monthly chart. Like as we've already seen and as we know, Tesla, Apple, they can kind of move a lot more than the market. They're going to move in the same general direction, but they got a little bit more oomph to them, especially that Tesla. The S&Ps puke from here. Well, then those 2 monthly squeezes aren't firing to the upside. So maybe if the market can just clean up a little bit of that monthly structure, that might do the Teslas, the Apples, some favors. Now the QQQ on a monthly chart, right, not bullish. We're in a squeeze, but we're under the 21. We don't have green 10x bars. So if I had a monthly buy signal, I'd have it in Apple. I'd have it in Tesla. I wouldn't have it in the S&Ps or the QQQ. And a big part of the reason, one of the reasons that previous monthly squeeze in Tesla was so crazy, and the previous monthly squeeze on Apple, as goes the market, goes the stocks. You also had your S&P 500 firing a monthly squeeze, and the QQQ. So for now, guys, those are two watch lists that I'm working with. And I don't want to call it the problem, but the reality of that, get long at the 21 EMA watch list, things like Shopify, which I like, right? The crowds, the EITOs, the SLBs. The only potential issue with those right now is just the fact the market's overbought. So your S&Ps pull on back to even 400. Just a normal dip. I'd like to buy it, but it's probably going to take everything with it. So just keep that in the back of your mind as you're placing trades and making your risk management decisions. And then we got the buy the dip watch list, which is pretty self-explanatory, right? But just keep in mind, right? If Tesla's up here at $900, where are we going to open up? We're going to open up at 920. Right, so Tesla opens up at 920. The daily 21 EMA down here at 790. Meaning Tesla could pull back by 14% tomorrow. There's no problems here. Right? It's not bearish. It's not breaking down. It's not ruining the structure. It's just a dip to the 21 EMA. I'd like to buy it. What I don't want to do is chase it up here for a swing trade, and then I'm taking all kinds of damage on that pullback that I'd rather put the cash to work into. So those are the two watch lists I'm working with for now, guys. If we check out a couple more charts here, right, the VIX still looks good. Market pulled back a little bit yesterday, so to get a little pop in the VIX makes sense. But that looks like it's moving lower here this morning, and then the dollar is really going to be what seals the deal here for the market. If we can get that big flush on the dollar, then I think the market's got the green light, to really get a good rally going. The issue right now, guys, is this thing's playing tough to get. We want to get it down here. It's playing a little tough to get. We're neutral, right? No buy sig, nothing overly bullish about it right now. But if you're looking for the market to trade higher, you would like to see Dixie coming on down. But that's it, guys. And then we did have some earnings last night, most notably AMD. So AMD is going to open up around 95. Yeah, percentage-wise, it's a pretty good flush, but it's kind of getting back to where it was yesterday morning, actually. And then I know we got a couple more coming up this week with earnings as well. But that's my game plan for now, guys. More than likely, in a perfect world, and how often is it perfect? But in a perfect world, the S&Ps, the Qs, we get one more nice push today. One more little poke to the ribs, to the shorts. Then I would like to get the Shopify off the table. If we can get 41-ish, it'll be just about a double. So in a perfect world, get a little bit more strength here today, maybe into tomorrow. I would like to cash out on my long positions. Granted, I only got one. Then I'd kind of like to sit back and wait for the dip. That is the game plan for now. Ooh, AJ, yeah, good example. Good example. The Dixie on the monthly chart. Yeah, so how many months are we in here? You said 6? Yeah, 1, 2, 3, 4, 5, 6. Really good observation, AJ, because this is why I think looking at different time frames is really helpful. Because now we've got this bigger picture context that what's really driving this thing is just this big old monthly squeeze. Now, not to say the dollar is going to make a move like the market did back here, but that move was ridiculous, guys. And it was triggered by a monthly squeeze. So there's these points where you're looking at a weekly chart. It's like, my God, like, how are we still trending higher? A lot of times there's a bigger squeeze out there responsible for a lot of that energy. Great question, Adam. I'm not sure if there's a right or a wrong answer. For me personally, you kind of got two styles of trading. And granted, I do know of a lot of traders who can do both really well. JC probably being, not probably, JC being the best. Two types of trades. Trades that are looking for the move away from the 21 EMA. In other words, trades taken in the path of least resistance. Then there's the reversal trades, like looking for those moves back to the 21. Personally, where I've had all my success is taking those trades that are in the path of least resistance. Whether I'm long or short, looking for the push away from the 21 EMA. Where I haven't had as much success is trying to time the short on Tesla here. Yes, we're overbought, but I'm also fighting this daily squeeze. It's a lot of momentum and energy getting released here. Yep, we are overbought. Now, Tesla can kind of be an extreme example, but overbought can turn to more overbought, can turn into more overbought. Where my thinking instead is, okay, path of least resistance seems to be to the upside. I know we're due for a flush pretty soon. I'm going to sit back and wait. And then when I get it, then I can get long at that 21, take profits up there at +2. So I would say if you're going to look for trades like that, Adam, you just want to lean into a few tools that are kind of designed to find those, those turning points, those spots of exhaustion. My two favorites for that kind of trade being the high-low pro, which a lot of you guys are familiar with from Sam over at Simpler, and then the ready, aim, fire. Really good question, though. Really good question. Yeah, good question. Good question. Earnings, and obviously the semiconductors are a pretty hot topic right now. Can an earnings miss in let's call it an important company? Can that impact the market? Absolutely. So far this morning, doesn't seem like AMD doing too much damage here to the overall market. Definitely possible. Where I think that's probably more likely. You always want to keep in mind, guys, the weighting. A vast majority of the cash that flows in and out of the market, of course, it goes into the individual stocks. But in a lot of ways, most of that capital, or a lot of it, is going into those individual stocks via these ETFs. Meaning, for conversation's sake, most of the big money, it's going to things like the S&Ps, QQQs, the XLKs, like billions and billions and billions of dollars. So, the names that are more likely to really cause some damage in the overall market, meaning they totally blow on earnings, and then it impacts the entire market. Typically, those are going to be the heavily weighted names. Right? So if you look at like the XLK ETF, and we look at the holdings here, and again, keep in mind like just how much cash flows through these ETFs. And you got mutual funds, all that good stuff. Apple and Microsoft alone, we'll round up a little bit, 50% of XLK. So if Adobe misses earnings and they're only 2% of this major ETF, it's not as likely to be as big of an impact as something like an Apple or a Microsoft. You got Apple gapping down 5, 6, 10%. Oh, Apple and Microsoft are 50% of XLK. And then if we jump over to the QQQ, which of course there's crazy amounts of money flowing through, and we look at our QQQ holdings. Come on, abuela. The dramatic pause. There we go. Holdings. Thank you, sir. Apple alone, 13% of QQQ. Apple, Microsoft, Amazon, Tesla, right? 13, round up 25, 35% of the QQQ. So just take that one stock, Apple. Apple's a huge chunk of the QQQ, and it's a huge chunk of the XLK. So those are the names that are a bit more likely to miss on earnings and really have a bad impact on the market, just because of how things are weighted. Now, a stock like AMD, I don't think it's so much the earnings miss. I think it'd be a bit more the forward guidance. But if you start getting some important companies, especially in the semiconductor space, coming out and painting a pretty bleak picture for the future, then that can kind of impact the market. So that's a really, really good question. And there's going to be a big red candle here, and we'll be down maybe 4 or 5%. But AMD looks really bullish here, all the way down to 88. So also, I think some important context too, where AMD starts to become a problem is if the structure just totally falls apart today, and then everything else kind of follows suit. But opening up at 95, when this looks pretty good all the way down to about 88, I don't think too much of an impact just yet. It's a great question, though. Hey, good morning, Robert. Thoughts on ABT? Kind of a tough read for now. And that tends to be the case when everything's neutral on the big three. So from a daily chart down to a 5-minute, I don't have a buy signal or a sell signal. So nothing really telling me whether or not path of least resistance is to the upside or the downside. So for me, in this kind of situation, for one, I'd either do an iron condor, which basically guarantees it's going to make a crazy move. I'm only half kidding. Iron condors can be great when there's just no trend or momentum either which way. So you can do trades like that, or personally, I'd wait for some signals. If I'm trying to get bullish here, it's like, all right, let's hold above that 21 EMA, and let's get some buy signals coming in. Or if I'm trying to short it, looking for the opposite. So that's one I'd look for a little bit more clarity in. Hey, JC, let's check out old Nancy. Let's check out a few of these defense names. Yeah, you're not kidding. They move pretty quick. I mean, for a swing trade, kind of tough for me to want to come in and jump on board up here. But we're cleaning up structure. Got some buy signals coming in. Could be an interesting one on the dip. See what old Nancy's got up her sleeves. All right, guys, make sure I keep getting all the questions here. Hey, Simple Trading, good morning. The bosses are here, guys. Behave. Yeah, Andrew, I badly. I went open at 9:20. I would love. I mean, Andrew, I'm almost thinking, just because it's Tesla, I'm almost thinking an 1100 butterfly. I'll probably do one at 1,000. I'd like to do it on a dip. I know John and a few others are kind of looking for a dip to 860, which is still super overbought. But hey, beggars can't be choosers. We'll work with it. I would like something up there at 1,000, but there's also a part of me thinking 1100. Obviously, right? It'd be great risk reward. especially if we could get it on a nice flush. I came into the week thinking, yeah, 1,000 strike butterfly. But now I'm kind of thinking, all right, if I'm going to give that trade, a couple of weeks, I might look to shoot a little bit higher. If I do anything at 1,000, now I'm thinking maybe, selling the in the money put credit spread, maybe a cheaper out the money called debit spread. Put it this way, I think there's a chance it could overshoot 1,000. I don't know if it's going to overshoot 1,100. But I would like to get a dip here. I would. We all know how Tesla gets. A little bit frisky. When she heats up. All right, guys. Make sure I don't miss any questions here. Yeah, AJ. Absolutely. It does offer a little bit of context, that monthly chart there in the Dixie. Yeah, Chaz, I'd agree, Chaz, that it's definitely possible. And here's why I think it's possible, right? Where we could really, go a little bit higher in the short term than most folks think, before we get the flush. I think we could kind of add some fuel to the fire here. It's just kind of the fact that it still seems like the world is just super bearish. Like the narrative, the whole notion out there is that the market's going to collapse. Kind of strikes me as every little dip we get here, you might get people shorting into it. Like, here we go, because they're kind of expecting this. Right, we rallied, we totally fall apart. Last week was the first time in like 12, 13 months where that wasn't the case. We actually got back above that daily 21. You probably had a lot of people getting short into that, right? Because they're looking for this. They're looking for this. Instead, the market held up beautifully. Starts turning the corner, going higher. A little bit of fuel to the fire with everybody covering those shorts. So even on a day like today, right, that little flush you got yesterday, that could potentially trap some shorts. So yeah, even though we're overbought, and even though I would like to see a dip, I do think we could go a little bit higher in the short term. To your point, kind of run those stops, right? And what Chaz means by run the stops, guys, is, imagine you're shorting this most recent bounce. All right, I'm going to short the rally, look for my flush. You're probably putting your stops right above that price. So a lot of times the market will rally just enough to trigger all those stops. Then you get the old flusheroo. The old flusheroo. But all right, guys, listen, I'm going to cut you loose here. I got to run to the convenience store real quick before the open. But listen, I hope y'all found this helpful. For those of you that did the Big 3 class, we got the last live trading day today for the elite portion. And for those of you in the mastery, we'll be live tomorrow, typical time, typical channel, and then we'll be live on Friday, typical time, typical channel. But I hope you guys found this helpful. Chandler will be live on the mic here on Friday morning, and then as always, guys, Sunday afternoon, I'll put the weekly Watchlist video up on the YouTube channel. But I hope you found this helpful. Be patient, guys. Be disciplined, and I'll talk to you soon.